Good day, ladies and gentlemen. Once again, we are in topic number 7 of chapter 1 of Statistics for Accountants 1, previously called Business Calculations. Other institutions call it Theory of Finance. Then we have a variety of topics in chapter 1 in this module. Very independent chapters. Now we are one of them called Profit and Loss. Remember, you can't make both profit and loss. You either make a profit or a loss at a specific point in time. Just want to highlight that. Now, basic definitions that are quite important for the foundation and the basics of this chapter, and also the advanced level of this part of the chapter. Profit, obviously profit and loss, we are dealing with the profit or loss on the sale of an asset. Selling price minus cost price is equal to a profit. Obviously, we are under the assumption that the selling price is greater than the cost price. That is why we are making a profit. A loss is a cost price minus selling price, and we are under the assumption that the cost price is greater than the selling price. That means we are selling the asset at a price less than the cost that we have bought it for. A discount is a marked price minus the selling price, then that will give us the discount, meaning the item must have been marked at this amount. Then we sell it at a price less than the marked up price. Therefore, now that becomes the discount, being the difference between the two. Very important also to master. I will be going back, obviously, when I'm applying all these formulas in our workings or definitions. Then we come now to formulas, and I've given them to you, and I will be referring to these formulas as I work through the example that I have provided for you, example 7 and example 8. Profit percentage, very important to know how to calculate profit percentage. It is a profit divided by the cost price times by 100 over 1. Remember, the profit would have been calculated there by saying selling price minus the cost price when the selling price is above the cost price and the profit is made. Selling price is equal to 1. This 1 is always there, and I don't want to go to the derivative of that 1. It is 1 plus profit percentage times by the cost price of the product. That will give us the selling price. And I want to highlight the fact that it is 1 plus the profit percentage. We add the profit percentage, not the markup percentage. There is a difference between the two, because the markup is a markup, then the selling price is the selling price, and the difference between the two is the discount. Then meaning when you sell a product at a price less than its markup, then the selling price will be less than the markup amount or percentage. So that means always the markup amount is greater than the selling price. A loss percentage is a loss divided by cost price times by 100, which we know that a loss is a cost price minus the selling price when the cost price is greater than the selling price. Then we have a selling price when a loss is made. I want to highlight that this was a selling price when a profit is made. Then this is a selling price when a loss is made. We say 1 minus the loss percentage, multiply it by the cost price. Then that will give us the selling price if there is a loss that has been made on the sale of that item. Meaning now obviously this selling price will be less than the cost price of an item. Then after we have a discount percentage. Discount percentage is a discount amount divided by marked up price. Remember, discount is a marked up price minus the selling price, so let's also remember that. Then we have a selling price when a discount is given. Guys, there are 3 selling prices here. First of all, we have a profit percentage and a selling price when a profit is made. Then we have a loss percentage and a selling price when a loss is made. Then after we have a discount percentage and a selling price when a discount is made. So please do look at the flow of these formulas. They are not just randomly placed in the manner in which they are placed, but they follow a certain pattern or a certain order. So now a selling price when a discount is made, we say minus discount times by the marked up price. Then obviously the selling price now will be less than the marked up price because there is a discount that has been taken into account. Obviously the one indicate 100%, so if the discount is 5%, in other words we are deducting 5% out of the marked up price, which was 100%. So now we have to master these formulas, guys, and also the definitions. Then we have our example number 7, which is A, B, C, D, and only D. Then number 8, I will record it in a separate recording. And just for the sake of saving time, unless I will still have time after completing these ones. Then we have example 7, which says an item costing how much? 100 rand is sold for 150, and we are required to calculate the profit percentage, percentage. So now we need, no, it's not a profit percentage, I think it is just a profit, or it's a profit percentage, yes, profit percentage. Then now we go to a profit percentage calculation. Profit percentage says the profit divided by cost price. How to calculate the profit? First of all, profit is equal to selling price minus the cost price. So we first need to know the selling price and the cost price. Do we know the cost price? Yes, the cost price is given, and the selling price also is given as 150. So we can get to our profit percentage immediately. Then we can say our profit percentage is equal to 150 minus 100, all divided this by the cost price, then divide by 100, meaning this will be 50 rand divided by 100, meaning our profit percentage will be 50%. Why 50%? Is because we have made or we have multiplied this by 100 after, obviously, in order for us to get to 50%. Obviously, if our product that we bought, it costed us 100 rand and we sell it for 150, then we'll make an extra 50 rand, which is half of the cost of the product. Then this 50 rand is half of the cost of the product, which is why it is definitely 50%. Then after, now we go to the second example, simple example. These foundations are still very crucial. You want to make a profit of 40% on an item costing 80 rand, what it will be sold for. So we want to make a profit. What is the formula to calculate the profit, or what is the formula to calculate the selling price? They say, what will it be sold for? We are looking for the selling price. In simple terms, we are looking for the selling price when a profit is made. They say you want to make a profit, so here the selling price when a profit is made. That is the formula to make use of, or to use. So now what do we do in this case? We say our selling price when the profit is made is 1 plus the profit percentage, which is 0.4. Remember, guys, 0.4 is from 40 over 100. I always use decimals, guys, so please bear with me. Try to advance your level of understanding of percentages, which would have been done in the beginning of this chapter as a foundation to set the pace, so that when we are here, we are on the same page. Then we multiply this by the cost price, which is 80 rand there. We're still sticking to the formula. Then after, we say or open brackets 1 plus 0.40 close brackets equals, it will be 1.4 times by 80 rands. This gives us 112 rand. So now that means if we want to make 40% profit on an item that costed 80 rand, then we must sell it at 112 rands. Then we go to number C, which is just before the last example, which is example number D, then before example number 8. Number C says an item is marked at 400 less 20% discount cash. An item is marked at 400 rand less 20% discount for cash. That means the item is marked at 20% less a discount, less 20% discount for cash, meaning if the person buys the item for cash, therefore now there will be a 20% discount. Therefore now the question is, what is sold, what is it sold for? So what is the selling price? Remember, the marked up price would have been the cost. They say an item is marked at 400. Take note of that. An item is marked at 400. In other words, we would have calculated our marked up price by saying MP. I'm just explaining now. MP is equal to 1 plus a percentage that we don't know, whatever percentage it is which we don't know, but we would have added the percentage. Then after we multiply this by the cost price, then this will give us what we call the marked up price. Multiply by the cost price, this will give us the marked up price of 400. But we don't know the markup percentage, and either we don't know the cost price. But we know that the marked up price for this item was 400 is 400 rands. So now we need to give a discount so that the selling price is after a discount was taken into account. So now what are we looking for? We are looking for the selling price when a marked up price or when a discount is given. In fact, remember, this MP is continuation multiplied by MP. So this MP is in here. So we are looking for the selling price. At what price must an item be sold for if we are provided with a markup and a discount is given? So now that is where we are focusing on the selling price of this item. Selling price is equal to 1 minus 0.2, which is 20%, times by the marked up price. Remember guys, whenever a discount is given, it means the selling price is less than the marked up price. Remember, marked up price is when you say cost plus markup percentage. Then now that will be the marked up price. If there's no discount that is given, the selling price is likely to be the same as the marked up price, unless we want to get a profit that is less than the marked up price. So now in this case, that means our selling price will be less than the markup price. Why? Because there is a discount that is given, so that our markup price is 20% less than the selling price because of the discount. So our marked up price will be 20% less than the selling price. Why? Because a 20% discount was given. In other words, out of the 400 of the markup that we have, we are selling the product at 80% in simple terms, which becomes 320 rands. That 320 is open brackets 1 minus 0.20 close brackets times by 400, and we get to the same 320 rands. There the message, stay safe when you wash your hands well regularly, but we are not there. Now this is the selling price. It means the selling price of this product is 80% of the marked up price. Is 80% of the marked up price. Why? Because a discount was given. So we're selling the item at a price less than the percentage in which, or the price in which the item was marked at. So that is why now I will always say that the selling price is always less than the marked up price. There we can see our marked up price being 400, which is 100%, and the selling price being 320. Then now we go to the last part of this example number 7. Before we stop this recording in very few minutes, then after do example number 8. After allowing a discount of how much? After allowing a discount of 25% on its MP, which is marked up price, that is MP, an item is sold for 480. It's very important to know what we are given after allowing a discount. So we know that 25% is a discount, and we know the minute there's a discount given, meaning if our discount is 25%, that means our selling price is equal to 75%. Remember, we would have said selling price is equal to 1 minus discount percentage. We would have said discount percentage of 25%. So now if we say 1 minus 0.25, this will give us 0.75, which is 75%. So that is where that 75% is coming from, or emanates from. So now we have deducted 25% here, then we say times by marked up price. That means we are reducing our marked up price by 25%, meaning we only multiply it by 75%, which becomes our selling price. So my point is that selling price is 75% if the discount is 25%. Then after now we are given the MP, which is our marked up price, and it says what was it marked for. So now, after allowing a discount of 20% of the marked up price, an item is sold for 480. So we know that we are given the selling price of 480. So we have the selling price, we have the discount. What are we looking for? We are looking for MP. It says what was it marked for? What was it marked for? We are looking for the marked up price, and there the marked up price that continues there. So we do have the selling price in this formula. We can see that our selling price is clearly given, and we know that our selling price is the selling price 480. Then we have to substitute our MP, which is we are looking for the marked up price. This is what is the question. We do have the discount again to substitute, so we know the unknown that we are looking for. So now let us continue looking for that unknown. We have the formula. I'm not going to rewrite the formula. Please rewrite the formula when you're writing a manual exam. It's necessary unless the exam is online. You can do your workings on the side. Obviously, we will not see no calculations, but good to master the formulas again. Selling price, I will substitute it already with 480 equals 1 minus 0.25. Then now I want, even before this times by MP, I just want to do this. Remember, I said to you that selling price is 75%. Selling price is equal to 75%, and we know that marked up price is equal to 100%. So now in other words, we can just say MP is equal to 480 times by 100 divide by 75, because this selling price, which is 75%, equals to 480. So now because we know that, we can just use a shortcut approach. 480 times by 100 divide by 75. This gives us 640 as our marked up price. So let us check if these figures they align with our formulas also. Now our MP, let us check how much will be our MP. We have 1 minus 0.25. Let me put that in brackets, open brackets, 1 minus 0.25, close brackets, times, we're not going to be able to multiply because this is MP. So now what does this mean? It means we continue by saying equals 480 is equal to 1 minus 0. It will give us 0.75 MP. Then we divide here by 0.75, and this cancel this. Whatever we do on the right hand side, we also do it on the left hand side. So that means our marked up price will be obviously 640, because it will be 480 divided by 0.75, which is equal to 640. So now you need to just know the basics of the formulas, but when you know your numbers, you can just work your numbers around without having to structure everything in the format of the formulas. As long as you just know your stuff, I'll be happy with you with that. Now guys, with that, let me stop this recording, then I will record now and continue with example 8 on profit and loss. That is the topic for the season. Thank you.